Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Monday, July 17th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've had quite the move higher in the ES here. Ever since we were right at the center of that range, we got a big time push through 2430s. That continued through our 43 half key pivot there and has pushed to new highs now into as high as the 2461s. And remains quite bullish. Right now is a bit of a digestion day at the moment, as this thing is basically fading back and forth in the intraday chart. Fade new highs, fade new lows, the basic approach there. But this is still in an uptrending market, so everything is still pointing up until proven otherwise, until we see some sort of rejection, should we see rejection. I think right now any failure to hold above the previous high here, that's going to be the level to watch, obviously. So if price continues to trade around here and then all of a sudden cannot hold it, then we may see a move back against the grain or back to value. But overall, this thing is still pointing up. And so the approach is still a bullish stance to defend pullbacks, that type of thing. But in the intraday chart, right here, you can see it's been fade the highs, fade the lows. Over here, we're just seeing moves back and forth. Now we're holding, and that could lead to just more of this type of behavior as this thing digests these recent moves. So overall, we could be looking at kind of a hold day here as this builds out from as high as 2460 even to as low as 2450. So this thing could do something like this or trade with an upward bias overall. So that's the look here for the ES. If you take a look at crude, we'll go to the higher time frame here. Again, our 43.76s have continued to hold. That was the squeeze point here, and then on the return, it was a great test 3 days in a row where it just absorbed off that level and eventually has pushed higher. We've gotten a nice continuation overall. We're holding closed above and are currently holding just above the previous month's close. And after a bunch of that movement last month here, in the last 2 months, we could be looking at a coiled up range here where this thing just kind of chops around value. So it has an upward bias as well. 45s was that next level to defend on the way up, and now you're starting to see the previous month's close become a key level here. But we have this entire VPOC here. We could continue to just chop. So right here, it doesn't offer great trade activity or trade location for either way at the moment, but it is building off this level, and we do have an overall upward bias. So we could just sit here and hold today and trade, and then Tuesday we could see a new low fail, and that could slingshot this thing back up toward our 48.76s rather. So there's a couple of opportunities that could present itself later in the week, but we got to see how this thing continues to trade off that previous close there. Taking a look here at the GC chart, this one has squeezed. We talked about the market structure and how it changed here, and there's a big squeeze here Friday right into our 1229.70s, and now back above that level. We talked about before how that level was important, and how each time recently it's gotten below that level, and then that's where the trap has occurred. So we're starting to see kind of that play out again here. We could get a pullback as deep as the midpoint of the squeeze day, 1223s, and still remain bullish. So overall, this thing is pointing up and could be looking at least a pushback toward 1259 CVPOC. So right here, the two key levels to watch, 1229 and 1223s, as this thing continues to push higher. Lastly, the NQ has been super bullish. We talked about the squeeze from here and also at the beginning of the week below the previous close, and that thing led to a week-long squeeze all the way up into 58.50, which is the major pivot in the chart where this thing had the major reverse the last couple of times. And so one time price was able to hold above that level, and then the stops came out, and then the next time it hit it and reversed. So right here, very important level, 58.50. Overall, we have this larger key range that's 59.07 half down into 55.50 half, and that's the larger range to watch as well. So right now, just like the ES, this thing continues to trend up until proven otherwise, until there's some sort of major rejection or a failed range expansion. Until then, this thing is still pushing up, so it's fade the edges with an upward bias today. And then if you look at the intraday chart right in here, it's very similar to the ES. So that's why you usually like to say you fade the edges, fade new highs, fade new lows. So down here you'd be looking to fade it back up. VWAP currently flat, and it's a tick or so off from VPOC. That's just kind of a trading range type of day, digestion day after the big day up. Friday with an upward bias, so fading down here makes more sense. And up here you have to be more careful about fading the upper end since we're in an upward trend. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.